God. Hello, hello. I think this has started to record already. Can you hear me, Jess?
Yeah.
Yep, awesome. If Caitlin, Stephen, Amy, I think Daniel's joining as well. I can see him in the bottom there somewhere. But if you can maybe just give us a thumbs up or something like that in the chat, just to let us know that you can hear us, that would be awesome. And yeah, we'll get started. Yep, awesome. Thank you.
That worked.
Brilliant. All right, well, let's get started. I'm going to pull up this slide and we'll get stuck into it. Jess, can you see this on your end?
Yeah.
Yep, awesome. All right, thanks for joining. It's our first home buyers masterclass. Jess and I have done a few Facebook Lives in the past, but we thought that for the next hour, we're really excited to give as much value and golden nuggets as we can by showing you, diving into it a little bit deeper than just our lives that we've been doing, because there's a lot to it, right? It's not a walk in the park. We don't get taught this stuff at school. So yeah, the idea of this is to give as much as we can. So very conscious of time as well. So yeah, let's get stuck into it. So what we'll cover today, step-by-step process to actually buying a property, including how to talk to agents, negotiate so that you don't overpay, which is pretty important in this market. It's easy to get stunned and getting, I guess, overwhelmed by that whole process. Find out what incentives you're eligible for, how to use them, other tips to help get you into your first home sooner. Latest property market insights for Brisbane specifically. And I think Jesse touched on Toowoomba as well.
Yeah.
And tips on what to do and what to avoid as a first home buyer. So yeah, obviously I'm a mortgage broker. I'll be chatting to you about the finance side of things to get yourself finance ready. And we've brought on Jess, who's an expert buyer's agent based in Brisbane and Toowoomba that specialises in first home buyers, to chat to you about the buying the property side, which is equally as important. So yeah, a little bit about me. Obviously, my name's Luke Ashby. I'm a mortgage broker. Based in Brisbane. We're actually based in Ashgrove on the north side of Brisbane, but we service clients all over Australia, which is really exciting. Also the founder of the First Home Buyers Club Queensland, which is something that I hold it's very important. I'm very proud of, because growing up I didn't get the education, didn't get taught finance or how to buy property or any of that sort of stuff. So since I've joined the industry and I know this, know the inside and out of how to buy property and finance and things like that, I really wanted to create a safe space for people to go on, get the information that they need to make better informed decisions. So that's why I created it. So I'm very proud of it. Hope you guys have got some value out of it as well. So jump on, get the information that you need, and go from there. So yeah, really passionate about helping first home buyers getting to the market, because I know how hard it is, especially in the current climate. But it is still very possible. So that's what we're going to show you tonight. Yes, it is difficult. You hear a lot in the media, interest rates are a lot higher than what they were at COVID. It's hard to save. Obviously, I don't disregard that. But it is still very possible, isn't it, Jess?
Yeah, for sure.
Yeah.
Just have to do it in the right way.
Yeah, definitely. So little bit about tonight. So this will run for about an hour. We're going to be try and stick to that as best we can. And so there'll be time for question and answering, Q&A as we go. So you should notice in Teams there you've got an option to go Q&A, or there's also the chat function there as well, which, Jess, if you can keep an eye on that as I go through my slides. We'll try and answer them as best we can as we go. And we'll answer, if we've missed any, we'll answer it at the end. The session is also recorded. If there's any tech issues, just refresh your browser and let us know in the chat. And there's also a first home buyer checklist that we'll send to you. I've got your email, so I'll shoot that off to you, probably tomorrow. But that's going to be really helpful for you. Cool. So we're going to get straight into it. First home buyer incentives, it can be pretty complex one to try and understand or navigate. Obviously, you can Google it and try and decipher yourself what you're eligible for and what's out there. So I've made it specifically for Queenslanders. So what we're going to talk about in this slide here is if you were to buy an existing property. So big difference for a lot of the first home buyer incentives. Some are for brand new property, never been lived in, or if you were to build your first home. But then there's specific ones that are eligible for buying an established property or an existing home. So the magic number when you're buying an existing property or established home is 700,000. So recently, well, probably 6 months ago, the Queensland government bumped up their stamp duty waiver limit. That used to be 500,000. Up to 500,000, you wouldn't pay any stamp duty at all. They've now increased it to 700,000. So that actually saves you about $17,000, which would otherwise go straight to the government in tax. So you don't have to save that extra 17 grand. And you also get some concession between 700,000 and 800,000. Now, there's also the first home guarantee scheme. Mind you, this is all if you were to live in the property. So not as if you were to buy it as an investment. So it's very different. So it's on the basis that you live in the property. The first home guarantee, I talk about it a lot. It's a way that we help a lot of clients get into the market a lot sooner. Without this scheme, I don't know how a lot of first home buyers would be able to get in. So essentially it's you might hear sometimes you only need a 5% deposit. You don't have to pay lender's mortgage insurance. That's essentially all it is. So 5% deposit, the government guarantee your loan. So they guarantee up to 15% of the property's value. So you don't pay your lender's mortgage insurance, so you save a lot of money on that. And you also get access to an interest rate as if you had a 20% deposit. So it's a double whammy. There's some really good, obviously incentives behind getting on there. So the magic number for that one is 700,000 in Brisbane, Sunshine Coast and Gold Coast areas. So you can't spend any more than that at this stage. So if you were to stack these incentives, let's look at if you were to buy a property up to 700,000, which, Jess, is that achievable in today's climate?
You can if you're looking at, say, a unit or a townhouse or looking outside of Brisbane.
Yeah. So they're definitely achievable. Obviously, you'd have to make some sacrifices in terms of the type of property that you're looking at, but it is possible. So let's assume that you're eligible for the first home guarantee. The main, eligibility criteria for that is that you're an Australian citizen or Australian permanent resident. You can be a Kiwi that's just moved over. So that's also an option. Single applicant, your income for the last financial year. Obviously, we're in a new financial year now. So for the financial year just gone, 125,000 for a single applicant and 200,000 for a couple. So assuming that you fit that criteria, they're the main ones. And you can get onto the stamp duty waiver, then you only need a deposit of 42,000. So it is still quite a lot of money. But if you had 42,000, that's 5% of 700,000 plus an allowance for small government costs. So yes, you won't pay stamp duty, but there will be some transfer fees and some little costs involved. And you do need to have some money set aside for a building and pest report and money aside for legal costs like a conveyance or a property solicitor. So 42 grand, and you'll save about 30,000 in lender's mortgage insurance and around 17,000 in stamp duty. Now, on the other side of things, if you were to build a property, Queensland government have waived stamp duty up to any value. So what does that say, Jess? They're obviously pretty keen to increase the amount of dwellings in Queensland and increase the supply. So they're trying to promote that, which is great. No stamp duty on that, on the house and land value if you were to build, which is obviously very exciting incentive. There's the first home guarantee scheme, which I mentioned just before. That is still up to 700,000, so they haven't increased that price cap. There is some news on that as well, which I'll share shortly. But 700,000 for house and land, it's pretty tough to do. In Brisbane, I think there may still be some areas here and there. Just be careful. There is postcode restrictions on the first home guarantee. So if you're living rurally, it may not be 700,000. The price cap is, it may be 550 or it may be something else. So just be careful. There is a website, National Housing Australia, if you wanted to jump on there and just check the areas. There's also the first homeowners grant, which the Queensland government has just extended the 30,000. So it was 15, it went up to 30 for a year, and then they've just extended that again for another financial year. So that's brilliant. Cannot exceed the value of 750,000. Now, if we were to stack these incentives or use them all at once, assume that you're eligible for the first home guarantee, we don't pay stamp duty, we get access to the first home owners grant, then you'd only need a deposit of about 10 grand, which is not a lot. And that's for a house and land package up to 700,000. So I recently did one which is very similar to this. It wasn't quite 700, but I think it was like 650-ish. And these two clients didn't have a lot of deposit. We got to use the first home guarantee, stamp duty waiver, first homeowners grant. And it's a really, really cool result to see. They're almost finished their build now, and the house is worth, 150K more than when they started building it, which is brilliant. It's worth trying to stack the incentives. Makes a big difference. So changes coming up in January 2026. So first home guarantee, there's going to be some big changes. There's no longer going to be an income cap threshold. So at the moment, as you can see, it's 125,000 for a single applicant, 200,000 for joint. And so that's scrapped as of January 1. There's also going to be a price cap increase from 700,000 to 1 mil. So that's going to open up a lot of better quality properties. And perhaps now we talk about, maybe buying that house as your first home. Mind you, you've got to have the income to be able to support that loan. So, obviously you've got to have the deposit, the minimum deposit required, but you've also got to have a lot of income to be able to service a loan to get up near 1 mil. Obviously it's worth chatting with a mortgage broker to run the numbers to see where you sit with that. As a single income earner, that's going to be really tough, but maybe as a couple, it could be possible. So that's really exciting. Now, one of the most underutilised first home buyer incentives, in my opinion, is the first home super saver scheme. So anyone out there listening to this that is, sort of getting their ducks lined up, you're not sure where you're at in terms of your journey, whether you're ready to buy or maybe you're a year or 2 or 3, that's fine. Have a look at the first home super saver scheme. It's a great way to save for your first home inside of your super. You can make voluntary contributions before or after tax. So you can have some incentives, I guess, tax-wise to do this. You can withdraw up to 50,000 at this stage to use towards your deposit. Obviously helps you to save faster and have some potential tax benefits as well. So the way I'd be taking advantage of this or looking into it further or getting it set up, would chat to your employer and chat to an accountant to set this up as well. There's also a couple of financial planners, within our networks, Jess, that specialise in helping set that up as well. So if anyone would like some recommendations to people in that space, feel free to reach out. It can be quite complex to try and navigate, but that would be the best place to start. Cool. Common questions that I get and the things that you need to know. So how much deposit do you really need? Depends. So there's so many options out there now. And I mentioned to you the other day as well, Jess, another one in own home, which we spoke about. So essentially if you had a parent with property and they've got equity inside that property, and they're happy to go as a guarantor for you on your property, your purchase, then you could theoretically not have to put in any deposit at all. You would want to have some cash set aside for your conveyancing and your building and pest inspection, and maybe a couple of grand to put towards as a deposit on the contract for the property. But theoretically, you can borrow the full purchase price of the property plus the costs if there's any stamp duty, if you had a guarantor. So I guess that's where it starts, is if you had a guarantor, you wouldn't really need much of a deposit at all. Then there's some options if you had a 2% deposit, and then there's obviously the 5% deposit option as well, which we've touched on quite a lot, the first home guarantee. They all have their own, I guess, impacts on whether you pay lender's mortgage insurance or whether you get the cheapest rate on the market. Obviously, rate's important, but stopping renting and getting into your own home is also important too, building your own asset. So they're the things that you need to be looking at. So I hope that covers off that. What if I don't qualify for the first home guarantee? What options do I have? So the Queensland government have announced there's a shared equity scheme. It does, I believe you can register for more information as of July 1, so you could register now. Myself, I don't have a lot of information on it. There's not a lot of info out there on it. So I am still waiting on that to flow through because it's something that was only recently announced. But you can register for more info on that scheme. So it's essentially you have a 2% deposit. The government has some equity in your home. Something I'd be careful of. I'm not too excited by it personally. Sharing my ownership of the home with the government. When you sell the property, there's going to be a percentage of the property's value that you need to pay the government back and things like that. So, but I mean, it's definitely going to help some people out there getting to the market. So that's definitely a positive. There's also own home. I'd recommend having a look at that. It's a different option to LMI, like paying lender's mortgage insurance. You can get into the market a lot with a smaller deposit, and you don't have to pay as high a premium as lender's mortgage insurance. So it's worth looking at. So lender's mortgage insurance, what is it and how to avoid it? Essentially, an insurance policy for the lender, that protects the lender and not you in the event that you default on your loan. So it can be very expensive. As I mentioned in the scenario before, if you would buy a $700,000 property and you didn't have the first home guarantee, you only had the 5% deposit, you could pay 30 grand in lender's mortgage insurance. And what happens is that 30 grand just gets added onto your loan and you pay it off over 30 years, which you can imagine the cost of that is significant. Ways to avoid it: have a guarantor, parental guarantor. So mum, dad with property, or grandma, granddad, even brother, sister. These are the, relatives that can go guarantor for you. So that's one way to avoid it. There's also the first home guarantee, or have a 20% deposit plus costs, which is hard to save a 20% deposit in this market.
Yeah.
You can't save as fast as the market is moving. So probably not an option I'll be looking at unless you were lucky enough to have parents that could gift you that money, or you've obviously been saving over a long period of time. They're the things to look at. Is it bad to pay it? No. I remember I paid lender's mortgage insurance when we bought our place. And it was a small cost to pay to be able to get our foot in the door, take advantage of the capital growth in the property in the market at that time. And the cost of the LMI is irrelevant now. We've had it for a couple of years. They're the things that you need to think about. I like to think of LMI as an enabler and not a disabler. So if you're chatting with a mortgage broker and they say, look, you can't qualify for the first home guarantee, obviously you don't have a guarantor, your only option is to pay lender's mortgage insurance. Well, it's not the end of the world. If it means that you stop renting, you have your own space, you can pay off your own asset, start customizing things in your own house and not having to ask anyone. There's a lot of value in that.
And just on that as well, like if the option is either save a bigger deposit or pay the LMI, with how the market's moving, like you have to look at your specific situation, but if you can get into the market sooner, you're going to be saving that money anyway. Like it's going to cost you more in the long run to wait. So
and we'll get into how fast the market's moving when you have your slides. So it's not the end of the world. And it's great. It's a great option to have. It's better than not having LMI as an option at all, and everyone has to save a 20% deposit like it was back in the day. So genuine savings versus gifted funds. So you're probably thinking, what the hell does that mean? So genuine savings, the banks look for if you've only got a 5% deposit. So the banks want to see, or the lenders, they want to see that you've got 5% of the purchase price genuinely saved and inside your account saved over a period of 3 months. So that's what genuine savings is. So if you're talking to a mortgage broker and they say, is your deposit genuinely saved? That means, if you've been parking your money aside each week for the last 6 months, then yes, it is genuinely saved, and the bank's happy with that. They just want to know that you've got the ability to save consistently and that you can make your repayments. That's essentially, it's like a character check for them. Now there's gifted funds. So gifted funds means, you might have parents that have money set aside that they want to gift you to go towards your deposit. So that's, gifted funds. There are some lenders that will say, for example, I didn't have any deposit at all. I had no money to my name, but mum and dad had 30K that they were going to gift me. And I wanted to buy my first home. So it was a $500,000 home. I needed 25 grand or 28 grand. Then there are some lenders, if I got gifted that money, they're happy to take that as genuine savings if I've been renting for 6 months through a rental agency, like a private rental agency, and I could provide a rental ledger. And then that just shows the bank that, hey, look, Luke's been making his rental payments on time. We can see he's got good character. Yes, he's been gifted a deposit and it's not genuine, but we're happy to rely on that. Outside of that, there is a lender if you got your money gifted into your account. There's one lender if it's been in your account for 1 day and you've got a gift letter just basically saying mum and dad have gifted this money, it's non-repayable, they'll consider it as genuine savings. So it's not a hard and fast rule. There's some, I guess, intricacies around it. So even more reason to have a chat with a broker about your own individual situation. Ways to strengthen borrowing power. Income is the biggest one, and it's obviously not easy to do as far as increase your income. If you're employed, you can only really ask for a pay rise. If you're self-employed, you may have more ability to increase your income. The other things I'd be doing outside of that would be get rid of your credit cards, pay off car loans, HEX debts as well makes a big difference. So it doesn't matter how much you've got left owing on your HEX debt, it works off your income and the repayment threshold. So these are the things that you can explore with your mortgage broker just to see what I can do to increase borrowing power, but they're the big ones. Why starting a conversation with a mortgage broker early is key, is because you don't know how far you are from being ready. You could be ready to lean into it and get pre-approved next week, and you may in your eyes think you're 2 years away. And obviously in 2 years' time, property value could be a lot further along than where it is today, and it's worth just having a chat because you could be a lot closer than you think. So that's why it's important. There's plans and things that we can put in place to get you there sooner as well. So that is that one. So some lender policies that I wanted to highlight. So I've talked about guarantor loans already. Mum and dad having property or family with equity, happy to help as guarantor. You don't pay your lender's mortgage insurance. Some LMI waivers as well for some particular professions. So nurses, doctors, lawyers, physios, paramedics, police officers, firefighters. There's a whole range of different professions. Unfortunately, not mortgage brokers just yet. I'm looking forward to that in the future, hopefully. But no, there's if you're in a medical profession, there's often going to be an LMI waiver out there for you. Outside of that, your emergency services like registered nurses and firefighters and so on. So if you fit any of those bills, just reach out to your mortgage broker and just get them to check for you to see if there is an LMI waiver. So with the LMI waivers, it's only really doctors that'll get away with a 5% deposit and not have to pay lender's mortgage insurance. A lot of the other professions have got to come up with a 10% deposit. So it's another option. Casual short-term employment and being on probation. So casual employment, the lenders have a blanket rule, 6 months in your role. So you need to be 6 months in your role for casual. Unless you've hopped from a lot of casual roles at a similar industry, like pub work, and if there's a bit of history behind it, potentially there's maybe 1 or 2 lenders that'll take it with 3 months, but most will see it over 6. So short-term employment, if the job's permanent, there's no end date to a contract, full-time or part-time permanent, then there are lenders that can take your income with one pay slip. So even if it's a new to industry role as well. So, keep that in mind. A lot of people say, oh, I've just started a job, bank's not going to look at me for 6 months. But if it's a permanent role, it could be a lot sooner. And then being on probation, similar thing. If it's a permanent role, there's lenders that will take your income straight off the bat, which is really cool. So there's a lot of really good, options out there for people now. Self-employed income. So this is a big one that sort of gets, a lot of misinformation out there as well. Does depend on the structure of your business. So typically, like traditionally, lenders will want to see 2 full years of financials as a business. So they want to see that your ABN's been registered for 2 years and you've got 2 full financial years tax returns under your belt. Now, a way to, fast track getting a home loan, there's some really cool policies out there where if you're trading, I'm not going to dive too far into it because it'd be quite boring for a lot of people that aren't self-employed. But if you are self-employed, you have a trading company, PTY Limited. If you're a director of that company and you pay yourself a wage for 6 months, like say you paid yourself $100,000 a year for 6 months, then the lender can actually annualize that income and look at you as if you were like an employee. So if you had business debts and things like that, that gets ignored as long as you're trading profitably. So there's some really cool stuff, essentially. So if you started a new business, you were trading for 6 months, paid yourself an income of consistently for that 6 months, theoretically you could get a home loan with a decent lender. So yeah, that's really cool.
Awesome.
Mistakes to avoid as a first home buyer: don't change your job before settlement. Please don't do that. I have seen it before, and it's heartbreaking. So don't do that. Taking on new liabilities, credit card, car loan, don't do that. Particularly as you're going through the approval to settlement process. Not getting a pre-approval before shopping, especially before an auction, in this market as well. Underestimating purchasing costs. So when you hear, you might hear some stuff online, people are like, oh, you just need a 5% deposit, but they're not factoring in that you need potentially money allowed for stamp duty or other costs like your legal fees, building and pests. So legal fees, I like to allow a buffer of like $2,000, and then building and pests, I like to allow a buffer of $600-700 type thing. So just keep those things in mind. Just make sure you're allowing for those. My top tips to get into the market sooner. So consider rent vesting. I'm a big fan of rent vesting. You do forego any first home buyer incentives if you're rent vesting straight off the bat. Rent vesting is essentially where you rent in an area where it suits your lifestyle. So say you're renting in Tenerife, and then obviously you may not be able to buy a property to live in Tenerife, for example, but you can afford a property to live a property to buy in Toowoomba, for example. So a lot of people doing this, rent vesting, can be quite beneficial for borrowing capacity, can also be some tax incentives as well. So that's something to look at if you can't afford to buy a place to live in where you want to live, essentially, or where within a reasonable commute of where you want to live. Because I think the first thing you should be doing is looking to see if you can take advantage of the first home buyer incentives. You can only do that once. Utilize the first home guarantee. Make that compromise on location and quality of the home for the sake of getting on the property ladder. I'd be seriously considering that. See if parents can assist by going guarantor. Obviously, they need to have the property in their own name, have equity inside the property, can help you get into the property with as little as no deposit. You can have that as a property to live in or as an investment property as well. So I see that quite a lot. See if your parents can boost your deposit via a gift. You never know, they may have some money set aside to help you get into the market. So definitely consider that. They're the main tips I've got. So typical process timelines working with a mortgage broker. So we'd have an initial chat, understand your goals, your position, your goals not only initially but long term as well, because they're important to plan for, particularly with the first loan too. ensure that you're in a position to be able to move forward. Or if you're not, then we'll set a savings goal so you know exactly what you're saving towards. Because if you're aimlessly saving out there without knowing what you're saving towards, you're not going to reach your savings goal as quick as if you knew what you're saving towards. So, we don't cost you anything to have a chat. So have a conversation, work out what that is. Put a plan in place. We'll do a pre-assessment of borrowing capacity, get you pre-approved. You find a property, perhaps with the help of Jess, and sign a contract, move to formal approval, get some valuations done, and loan documents will be issued, signed, settlement day, keys in hand, pizza on the floor for the first night, and happy days. Your buying team. So it's not just going to be a mortgage broker. There's very important people involved in the process, just like Jess. So, you may want to opt to use a buyer's agent. Look, I can see, they're worth their weight in gold in this market. They'll help you find the right property, negotiate on your behalf, protect you from buying the wrong property. Conveyancer, they're essential in the process. They're reviewing contracts of sales, managing the legal side of the purchase, ensuring settlement runs smoothly. And then building and pest is also highly recommended as well. Inspect the property for any issues, potential risks, give you peace of mind before you buy the property as well. So that's about it from me. What's next? If you want to book a call, feel free to. I'm sure you'll find my details in the group there. If not, just send me a DM. There's also the free checklist that will come to your inbox likely tomorrow. There's also my cheeky social handles there as well. So, thanks for listening. Hope you guys got a lot out of it. Any questions, just reach out along the way. Jess, that's it from me.
Amazing.
Now to the exciting stuff.
No, I think that's the exciting stuff. Now we're going to talk about how to actually buy the property.
Yeah.
So let me just bring this up. Can you see that screen? Oh, maybe if I shared it, you'd be able to.
Yep. I can see that.
Okay, perfect. Yep. As Luke said, as a buyer's agent, I help people buy property, and the best way I can add value to your search or my client searches is by being super efficient at doing that and making sure that the due diligence is done as much upfront as possible. So I'll talk you through a few of those things, what the market's doing, and then we'll talk about negotiation as well. So anybody that's looking at a property right now is probably very well aware that prices are still going up. I specialise in the Brisbane and Toowoomba market, so that's the markets that I'm going to talk about. Both markets, they're still going up. So in Brisbane, it's gone up about 7.1% in the last year. In Toowoomba, about 5.4% in the last year, but still both very strong markets that are moving quite rapidly. And we're seeing a lot more auctions in Brisbane, probably since COVID. So now even things like apartments, as I'm sure you're aware, are going to auction, which just shows that people are being very competitive as well. Fewer days on market, so things are selling really quickly, which means that if for the buyers that are organised, so they have their finance ready, they know what they're looking for, you're going to be in the best position. So in a fast-moving market, the more prepared you can be upfront, the better position you're going to be in. And if you're renting, you know that rent's not cheap. It's gone up over 5.1% in Brisbane over the last year. So more and more people are being pushed into buying as well, because just the rental market isn't as stable as we would like, and it's just ever increasing. Now, obviously, with Brisbane prices being quite high, it can be harder as a first home buyer, especially if you want the house. And that's where markets like Toowoomba might be a good option. So whether you're able to do the commute or you're looking at rent vesting, it can offer some really good options. Luke and I are working with a client at the moment. We just purchased a house just under 700. So a house move-in ready under 700. which you're just not getting in Brisbane. And I would say if you've got anywhere from like 600 to 700 range in Toowoomba, you'll be able to get a house. So let's talk about some of the tips when you actually start to look for a property. So the first one is when you start looking at the apps, if you're looking at realestate.com, which is the most popular one in Queensland, make sure you also look at Domain. You'll see here that the pricing to list an ad on realestate.com is quite expensive. So in Wollongabba, we're looking at just over $3,000, and on Domain, it's only $460. So if an agent has a seller that's a little bit tighter on their marketing budget, they may only opt for Domain. So make sure you're checking both apps just to make sure you're completely across everything. If you look here, I did a search on Everton Park on realestate.com and Domain, 34 results for Everton Park on realestate.com, but only 22 on Domain. So of those 22, they may not be all in the 34, if that makes sense. So make sure you're checking both.
So just, could there be some houses on Domain that's not on realestate.com and therefore not getting as much traffic and maybe less people with the open homes?
Yeah, so they're potentially. And that's why I say it's always good to check both, because that way you're across everything. Interstate, so New South Wales and Victoria, they use Domain a lot more. So for interstate buyers, they'll always look at Domain. For Queensland, for some reason, we always look at REA. So it's one of those weird things. So check both, and then that way you're seeing everything.
Yep.
Okay, so when we talk about due diligence, there's a lot that can be done upfront that will save you time. And this is where I talk about being efficient. A lot of people, when they first start looking for properties, they end up going to so many open homes. And once they get to the property, they're like, I've wasted my time. Like, I don't like the location. I didn't realize it was busy. And now I've wasted a big chunk of my morning. So that's what we want to avoid. So if we look at this house, it's in Chermside West, so it's a good suburb on the north side. It's a 4-bedroom house, looks pretty solid, good sized block. Sorry to say this one has sold, but good price point. But if we just look at the flood overlay, we can see it sits in a flood zone. If we look at the aerial view, we can see it's on a big roundabout. So you're going to get a lot of traffic, and getting in and out of here will be busier certain times of the day, especially. And the noise overlay, because it is in a high traffic area, is going to be quite loud. So you can check those all on the one website, which is the Brisbane City Council. And automatically, for me, I would go, I'm not going to bother with that inspection, because I just know it's not going to suit what my client's looking for, and it may not suit what you're looking for. So automatically you're saving at least one inspection. So another thing is that people don't do, and it's so basic and it's going to sound really, really basic, is check Google Street View. When they do the marketing photos for a property, they're going to take them at the best angle. They're trying to sell this property, so it has to draw you in. This is the first thing you're seeing. So it's always going to be the best angle. So if you look at Google Street View, this house looks beautiful. But Google Street View will see that there's these massive electrical towers in the background. So probably not ideal. And again, you can probably just write that one off. But if you're looking at Street View, you can also see what's the parking like in the street? What's the traffic going to be like? What do the other houses look like? Is it the right scenario location for you? Now, when I was talking before about using the Brisbane City Council interactive mapping, every city council area will have some version of this. And it will have every single overlay that's color coded. Brisbane City Council is the most user friendly, but if you're not buying in Brisbane, there will definitely be some version of this with the local council. But it will show you kind of everything you need to know about that property in the first instance before you get to the inspection. So we can look at zoning. So each of these colours represent a different zone. This is a more residential, quiet area, so we don't have a lot of distinction between these ones. But this would be a low to medium residential area, which means really quiet, typically houses. You've got some parkland, but the zoning really dictates what you can do with your property and what your neighbours can do surrounding you. So if you're in a zone, if you're in an area that has a lot of houses, but it's zoned for townhouses, that means a lot of developers can come in and build around you, and it could become quite busy. Or if you've got an industrial zone or a commercial zone, it'll get busier because people can do those developments, or they may have already started. So if you're wanting somewhere quiet, which I would recommend, whether you're going to live in it or it's an investment property, we really want to be looking at those more residential zones.
Yeah. That's so important. I never looked at any of that when I bought my first place, but yeah, thankfully it's not an issue for me. But I'd say a lot of people don't do this.
Yeah, and you can just go on, you can have a look, and you might go, oh my God, there's a big industrial estate right at the end of the street. Probably not ideal. You'll probably have a lot of trucks coming through. But if you went a few blocks the other way, it's a nice quiet area. So it's just having a look. And like I said, this is all free on the council website.
Yeah.
Flood maps, especially if you're looking in Brisbane, but really anywhere, check the flood maps, because pretty much everywhere will flood to some degree. Again, you can look at the Brisbane City Council interactive mapping site, but council also has a Floodwise site, which I think is a little bit better. It will show you a report. You can look at historical data. So here you can see, you can click through and see the 2022, the 2011 and the 74 floods, and see how the water has, if it's moved up or down or whatever. And it'll generate a report for you and tell you like the likelihood of that, of your block flooding, or the block you're looking at. This is the difference between interactive mapping and Floodwise. So interactive mapping's on the top, Floodwise is on the bottom, both by Brisbane City Council, both show different data, but Floodwise does get updated more regularly. So I would say that's the more accurate one. But in the first instance, if you check interactive mapping, at least you've seen something. But I would still recommend checking Floodwise, especially for Brisbane. Demolition control, that's one that may become more important down the track. But if you're buying something that you want to renovate, or maybe you're thinking you could subdivide down the track, or do some kind of project, this will become very important. You've probably heard the terms pre-war and post-war if you've been to any open homes or looked at any listings. So pre-war is anything built pre-1946. So usually your Queenslander type timber houses, the really pretty timber ones, that's typically a pre-war. And then post-war is after 1946. Rule of thumb, you can knock down a post-war, but not a pre-war, but there's a lot of rules around that as well. So if we look at the interactive mapping, we can look at the demolition control. So if we look at this house in Paddington, it will show you, you can click through to see an aerial view pre-1946, which is really cool to have that data. And we can see that same house was there pre-1946. So we know it's pre-war. And then we can also look at the overlay, which is called a traditional building character overlay. And that also means that it's protected under the character housing, and you can't demolish that. So with these two things, it means that this house has to stay. So you can renovate, but you can't knock it down. So really useful to know if you're like, I'm going to do a project. Another thing, if you're doing a project, renovation, putting a pool in, or again, wanting to subdivide a block, is the contours, so the slope of the block, which can be seen on interactive mapping as well. I don't know how clear these lines are on a smaller screen, but the dark purple, the solid purple lines represent a meter. So in between each of these, and then in between those solid lines, there's a dotted purple line, which is half a meter. So you'll see these numbers. So this one, this is the front of the block here, and it's counting backwards. So it starts at 39, the front of the block, 38, 37, all the way down to 29 here. So we can see that's like a 10-meter slope back to the back of the block, which isn't ideal. That's quite a big slope. It means that the yard's probably not very usable. It'd be hard to do an extension, or quite expensive, or if you wanted to put a pool in, very expensive. And ideally, if you're going to get a sloped block, you want it to slope towards the road. Makes it a lot easier for your services. So again, looking at this one, the house might be beautiful, but just the slope, unless you're a very experienced developer, I would probably avoid that one. Another really good website is called Dial Before You Dig. It's free. So all these things I'm showing you are free. You basically set up your account, you put the address in that you want to look at, and it will come back to you with all of the civil plans. So that's your water, your stormwater, sewer, gas, anything that relates to that block, any civil infrastructure, it will show you the plans for. So really important, again, if you're wanting to put a pool in, wanting to do some kind of project, because it will really dictate what you can and can't do. If you buy a block that has a sewer line right through the middle of the backyard, it's probably going to be really difficult with boundaries to get a pool in. So check those things out before you will even go to the property to have a look at it, because if your heart is set on putting a pool in and you can't, there's really no point in looking at it. Now, you have done all this part. You have shortlisted your properties that are actually worth your time to look at to go to the open home. Here's some things that I would recommend that you do once you get there. So first thing is take notes, take videos, take photos. When you're taking photos and videos, make sure you ask the sales agent first, especially if the property is tenanted. They'll usually say yes, but always good to check. Because you can go through an open home, it can be quite overwhelming. There's a lot of people there and you will forget things. So as you go through, just take some photos, take some notes. So when you leave, you can look back on that and just refresh your memory and remember what you actually liked or didn't like about that property.
Take a tape measure as well.
Sorry?
Take a tape measure as well.
Yes. Great idea. I think people forget that one a lot because they're like, and trying to be polite. Another thing is open wardrobes. People yes, it is somebody else's house, but if you're going to spend hundreds of thousands of dollars on it, you're allowed to look in cupboards. So measure what you need, look in whatever cupboard you need. The other thing is to look up. A lot of people, they'll just sort of look around but you need to look up at the ceiling. Are there cracks? Can you see any, moisture, signs of moisture? Is there mold? Because these are things that are going to cost you money. Don't get caught up in the styling of the property. It is so beautiful and I've seen it time and time again, but it's another marketing thing to get you in, which is usually done really, really well. But look at how the layout flows. Does it actually fit how you live? Is there enough storage for you? Do you need to work from home? Does it allow that sort of thing to happen? So you need to be looking at the actual property itself rather than the beautiful styling, which I know is quite difficult, but it needs to suit you. Like I said, check the cupboards, take note of any smells. So if you smell damp, that's quite a big thing. Look for cracks and anything that might require maintenance, because even if it has those things, it might be okay. But you need to be aware of the things that might need to get fixed, and you need to factor that cost into your offer. And the big one is ask the agent questions. Again, you're there looking to buy a property that is going to cost hundreds of thousands of dollars. You need to make sure you are totally across what you were buying or looking to buy. So ask as many questions as you can think of. And even if it's not at the open home, maybe there's so many people there and it's a bit overwhelming, do it afterwards. Just give them a call and run through everything that you need to know.
Yeah. What are some of the questions you would ask a real estate agent? Yeah, should they have knowledge on when it was built? Is that important?
Sometimes they won't. This can be the frustrating thing. Sometimes they won't know, but they'll be able to give you an approximate. Obviously, when you're asking when it was built, you probably are trying to find out if it's pre or post-war, which the agent will know that. Ask why they're selling. Was it owner occupied? Is it tenanted? Those sort of things. Try to just get a real idea of, what the seller's situation is, but also ask about the suburb. If it's not a suburb you're super familiar with, the agent should be. So ask them, what are the neighbours like? What school's popular in the area? Like, ask all those questions so you get an idea of, the demographics and things like that.
Yep.
Now, been to the open home, you found the house that you actually want to put an offer in on. and then the agent will give you this offer form. So it will be some version of this. This is the REIQ one. So they'll give you some version of this to put an offer in on. And I get asked this question a lot from first-time buyers, like, what do I even put on this? So the first section will typically be your details, so that's pretty self-explanatory. And then there'll be the property details, so the address that you're offering on. And then we come down to your actual offer. So you'll put on there what your purchase price is, so what you want to offer on the property, and then what your deposit breakdown will be. So how a deposit works for a property is it's broken into two parts. So the first one is the initial deposit, and that's paid once you sign the contract. So you've put your offer in, they've accepted, you've both signed the contract, now you pay the initial deposit. And then the balance of deposit is paid once you go unconditional. So all the conditions have been satisfied, you've got an unconditional contract, you then pay the balance. Now, I typically base the total deposit on about 3% because that typically covers the sales agent's commission, which is what their commission comes out of this deposit because it gets held in trust. So if you kind of work it out on about 3%, sometimes the agent will dictate the amount it can be. It can't be over 10%. But if you go for around 3%, that's usually pretty right. And make the initial deposit the smaller of the two. So say if your total deposit was going to be $15,000, make the initial deposit $2,000 and then the balance of the 13 for the balance. And the reason for this, making that one the smaller one, is because if you have to terminate the contract based on finance or building and pest, they refund that money, but that could take a week. So if you're only waiting for $2,000 to come back as opposed to, you know, $10,000, that's a better position to be in. You can move on to the next property.
Might just add one thing, Jess, if you don't mind. I always get asked, is that like $2,000 extra that I need to come up with out of my deposit that we've allowed for and things like that? But no, it forms as part of your overall funds to purchase the property. So it's not like you have to come up with another $15,000 because you're putting it on this contract. That $15,000 just comes out of your total deposit, which could be, you know, 30, 40, 50.
Yeah. That's a great point because I get that question a lot as well. And people start to panic. They're like, where is this money coming from?
Yeah.
Like, it's already calculated. It's fine. And then with the due dates, and this will go for any of your conditions, your deposit, your settlement date, for the contract, it'll be how many days. So you don't put a date in. So it's not going to be the 7th of July. It'll be however many days from the contract date or from an unconditional contract date. So for your initial deposit, you can see this one's already filled in. So 2 business days from the contract date. So from the date the contract was signed today, that's the 7th. Day 1 starts tomorrow. So you've got 2 days to pay that. Weekends, if it's due on a weekend, it'll go to the Monday. So do that for both of them. So 2 business days from the contract date, and then the second one would be 2 days from the unconditional contract date. Finance, that's when you talk to Luke, your mortgage broker, on how many days you specifically need for your finance, because it can vary, and see, I guess, what's the minimum amount of days you can put in. And same thing, however many days from the contract date. So maybe it's 7 days. Building and pest do the same thing. I would recommend having a building and pest inspector already lined up before you put your offer in. Call them or text them and say, hey, what's your availability like for, you know, a house in Chermside? And then put that amount of, like, just give yourself an extra day from whenever they say. So if they're like, oh, I can get there on Tuesday, make the days Wednesday. And then it's whatever other special conditions maybe your conveyancer recommends. So run this by them. But finance and building and pest, I would say, is your pretty well non-negotiables. And then other conditions that you can talk to your conveyancer about would be if you're buying in a strata complex or body corporate, doing a body corporate record search, or if you're buying a property that is tenanted and you're going to have to take that tenancy on, either you're buying an investment property or that their lease doesn't end for a few months, do a tenancy due diligence, which means you get all of the documents from the property manager, and then whatever else the conveyancer recommends. And then the settlement due date is typically 30 days. but talk to the sales agent about what the seller actually needs, because that will put you in a better position. And then you sign. So you can talk through this offer with your conveyancer as you're doing it, especially if it's during the week, but definitely have your mortgage broker involved as well, your building and pest inspector, because then you'll be able to get your days correct.
Yep. Pauline just put in she has to leave to nighttime routine for the kids. Thanks, Pauline.
Thank you. Okay, and then we come to the negotiations. So I always think you should go for a win-win approach. I know some people look at negotiations like a game. I just don't see it that way. I think you should be trying to come to an agreement where everyone's happy. It's a big thing to buy a property, and it's also a big thing to sell a property. So if you can kind of get on the same page with the seller, you're going to be in a much better position to have your offer accepted. When you're talking to the sales agent, the questions you want to ask before your negotiation is, what terms does the seller want? And that relates to the settlement. So typical settlement is 30 days, but maybe the seller needs a longer settlement, or maybe they're buying something and they need a shorter settlement. So if you can work within that, that's really helpful. What is their motivation to sell? Now, the reason for this question is to find out if it's going to be price or if it's going to be conditions, because maybe they're looking to just cash in an investment property, which then they're just going to want the most money. Or maybe they're looking to try and buy, they're upsizing with their family, so they need, you to work in with their settlement. Maybe they need a rent back or something like that. So if you can work with them, then your conditions are going to be way more important in that instance. So it's just trying to determine what's important to them. When are they going to present offers? So if you go to an inspection on a Saturday, are the offers presented on the Saturday, or is it going to be Monday? So find out when, and when the offers close as well, because that's really important to make sure that you get your offer in on time. And ask the agent if there's a price guide. Now, if there's not a price guide, because they'll rarely give you an actual price, ask them what's sold recently that they would compare it to. So if they can give you some addresses, and then you can see how this one compares to that one, you'll be able to work out where it sits price-wise. Make it personal, put a bit of a story to the offer. A lot of times people don't want to talk to the agent and they make it a bit impersonal. They don't really want to answer their phone, but make it personal, try and build a bit of a rapport with them. Explain to them that maybe you've been looking for a while, or you're a young family or a young couple or whatever, and put that to the agent so that when they go to present offers, they sort of have a bit of an emotional story to put to the seller as well, because it honestly does help. Like I said, work with the seller and the sales agent. You want to go with that win-win approach. You want to be on their side, so that they want to help you, and let them know that you're interested. Again, a lot of people just put their offer in and don't want to talk to the agent. You can't buy something that they don't know that you're interested in buying. So put it to, actually talk to them, ask as many questions as possible, make it personable, build that rapport, and that will definitely help your positioning. Now, oh God, this isn't working. You're under contract, or you've signed a contract, your offer's been accepted. Now you've got to do the building and pest. And again, this is a non-negotiable in my opinion. And this is for the point of the building and pest inspection, is so you can see, or you can know about everything that you couldn't see. So when you went through the property, you saw the cracks, you saw some paint chipping, maybe there was a hole in the wall. This is for everything that you can't see that's behind. So anything structural, if there's termite issues, if there's moisture issues and mold and things like that. So yes, it costs money, but it could save you a lot of money in the long run. I actually just terminated a contract a couple of weeks ago based on the building and pest inspection, and it would have saved my client like $100,000 by not going through with that property, because we got the building and pest inspection, which cost $600. So wow. $600 save $100,000, I think, is a pretty good payoff. Yep. I would also recommend that you attend this inspection. You don't need to go there for the whole time, but it takes usually 45 minutes to an hour. If you turn up in the last 15-20 minutes, go around with the inspector. They'll point out the things that they're going to put in the report, so any issues, and they'll also explain to you how much of an issue that is. Like, is it the house is going to fall down, or is it something that you maybe need to get fixed in the next 2 years? So it's really good to just understand those things and know the timeline for when things need to be fixed. So you can either go back to the seller and try and negotiate something, or you can maybe terminate the contract if you need to. So definitely non-negotiable. You have signed the contract, happy days, you're moving forward. What do you actually have to do from that point, which I think can be very confusing because it's like, what happens now? And so first of all, you will send a copy of the signed contracts to your mortgage broker and to the conveyancer. Now do that straight away, because that way they can start doing all the things that they need to do in the background to make sure that things happen smoothly for you.
Yeah.
You'll pay that initial, so that's the smaller one. You also need to get home insurance by 5 p.m. day one. So that's day one starts the day after the contract date, because it is at your risk that you're buying this property. So make sure you get your insurance. Most insurers, you don't have to pay anything until settlement, and that's when it really kicks in, but you'll still be insured.
Yeah. For a townhouse and unit, Jess, is that required?
Yes.
Yeah.
Because you'll still get the body corporate insurance will cover the building, but this will cover the internal. So your carpet, your blinds, stuff like that. So very important. Yep. You'll lock in your building and pest inspection. So you need to confirm that with the inspector and with the sales agent, because they'll be the ones giving you access. You'll do tons of paperwork. So you'll have lots of paperwork from the conveyancer, you'll have lots of paperwork from your mortgage broker, and you'll be working through those conditions. So your finance, your building and pest, whatever else is in there. And this is the opportunity where you either satisfy your conditions, you negotiate with the sales agent, or you'll terminate. So whatever happens in that, that's the time to do that. And your conveyancer will work with you through those ones. But say you satisfy the conditions, you got your finance, the building and pest is really good, you go unconditional. So that's when you're locked in. So there's no pulling out of the contract now. You'll pay that final deposit and then you start getting organized to move, which is very exciting. There's not a lot that has to happen between unconditional and settlement. So that's kind of a bit of a weird limbo land, but that's when you can, start packing, get everything ready. About a day or two before your settlement, you'll do a pre-settlement inspection. So arrange that with the sales agent probably about a week before. And that's to go through and just make sure that the property is in the condition that you signed the contract. It was in when you signed the contract. So they haven't removed appliances or knocked out any walls, or there's been no major damage. That's the time to check those things. So make sure, really important to do that inspection, even if it's tenanted. Then settlement day will come. Settlement happens all electronically, so you won't really be a part of it until everybody starts calling and texting you and saying congratulations. And then you can celebrate. You've just bought a house. So very exciting.
Woohoo.
Yay. Okay, so lastly, top tips. Don't skip the due diligence. Like I said, there's so many things that you can do up front to shortlist a property to even see if it's worth going to inspect. But don't skip things like the building and pest. Check realestate.com and domain, really important. Take notes and photos at the open home. You will forget things. It's just inevitable. Always check flooding. Always attend the building and pest inspection. Communicate with the sales agent. They want to sell this property. They're not trying to work against you. So if you can kind of build a bit of a rapport with them and communicate, they'll be much more willing to work with you. And always go for that win-win approach. It's a really big decision. You're spending a lot of money and it's a big decision on the other side. So if everyone can walk away happy, I think that's the best outcome. And then same as Luke, if you want to discuss things further, you can book a call with me. We'll send out the details, and then that's my Instagram now.
Awesome.
But thanks, guys.
That was brilliant. Even I learned stuff each time. That you didn't know before. So I definitely got something out of it, and hope everyone else has in the webinar. Thanks heaps, Jess. That was amazing.
No, thank you.
So many important tips there. Just do your due diligence before you waste your time going to a house that's not worth going to. So well done. Any questions? feel free to pop them in the chat. We'll give you a couple of minutes to do that. Has anyone got any questions around finance, their particular, doesn't have to be your particular situation, but yeah, any questions around that, or any particular suburbs that you're interested in looking at? Perhaps Jess has got some advice or opinions around it. Feel free to drop them in the chat. But yeah, where are you seeing people pick up properties for under 700, Jess?
I would say Toowoomba. Well, for the clients that I work with, definitely Toowoomba. I am getting more people sort of inquiring around Ipswich area at the moment. But typically, yeah, Toowoomba, or they are more leaning to, which is not a bad thing at all, leaning towards units and townhouses. Like, as we both know, buying a unit and a townhouse as your first property is not a bad idea at all. But I think it's been sort of villainized for a little while. Like, you have to buy a house, and that's the advice you get from your parents. It has to be on a house on as big a block as possible. And the market's just changed so much. So one, that's not really feasible. And two, we're seeing such strong growth in that unit townhouse market that it kind of doesn't matter so much anymore. Maybe it'll change again in the future, but the growth is really strong, and you can use those properties as a stepping stone to get to the next one.
Yeah, 100%. So, you don't need to have the townhouse very long with the way things are moving.
No,
to leapfrog into that next time. And
it's a really good option if you say you just want to use the equity out of it. You're not going to sell it to buy the next one, but that will become the investment property. It's also a really easy product to rent out. Like, units and townhouses, you can always find a tenant for, even though we don't have that issue in the market at the moment of finding tenants. Like, that's quite easy, but it has historically always been an easy product to get tenants into.
Yeah, awesome.
Yeah,
you want to read that one?
Do you see with a first home guarantee going from 700 to $1 million that the 700K house will just boost to $1 million in property value pretty quickly? Unfortunately, yes.
Yeah, there's no doubt it'll drive. Yeah, there's no doubt it will drive prices up further. We've got an RBA, Reserve Bank of Australia, meeting tomorrow on the cash rates, and there may be another rate cut tomorrow. We've seen a couple already, and that's definitely sparked more people to have a conversation, see where they're at, what their borrowing capacity is, and when they can buy. So, with rates coming down, people can borrow a little bit more. Throw that in with the first home guarantee, increasing their price cap to $1 million. It's and lack of housing up here in Queensland or Brisbane, southeast Queensland. Can't see it going down anytime.
Competition's already so high, and if there's a rate cut plus the home guarantee plus the low stock, and there's not a lot of new builds, like, it's unfortunately inevitable. So again, the more prepared you are, the quicker you can get in, not to push anybody into the market, but if you are looking to buy, the quicker you can do that, the better.
If you're in a position to be able to buy something for 700 now, I'd be considering it. But if it's not realistic, then you need to wait a couple of months to get things lined up. Fair enough. Then be ready to rock and roll by January 1 next year. If you think you can live in a townhouse or a unit, maybe you're a single income earner and that's all you can afford, then explore that. But you won't know what you can do unless you have a conversation. So reach out to someone.
Knowing where you're at.
We don't cost you anything. So have a chat.
So that's the thing I think people don't realize, because I've had friends say this to me as well, that, maybe I'm not going to buy for a year or two, so I'll just wait. I'm like, you need to have those conversations now. So you know what you should be doing with your finances now, and how to best organize things now to be in the best position in a year or two. So it's having that discussion with your mortgage broker as soon as you even think about you might want to buy a property.
A lot of people, I don't know, seem maybe embarrassed to talk about their situation or don't want to waste our time or any of that sort of stuff. But yeah, that's what we're here for.
Like, we love talking about this stuff.
Yeah, that's a big part of our job is you know, when I just talk to you when you're ready and happy days. Yeah, it's all about setting you on that path. So yeah, don't let that hold you back.
Like I had someone contact me last week, and I hadn't heard from them for 2.5 years. And he rang me like, I spoke to you 2.5 years ago, but we're ready now. And that's so exciting because you're like, okay, cool. You've got everything organized. You know what you want. And we're really excited for that, as opposed to like, yeah, he sounded a little bit sheepish at the start. I'm like, that is so exciting. Yeah. We love that. Yeah. So it's having that discussion as soon as possible. And then when you're ready, then you can have the discussion properly again.
Yeah. Yeah. I love that. Love to hear that. Awesome. All right. Well, we might wrap things up. Thank you for joining everyone, and the questions on the way. And I want to thank you as well, Jess, for your time tonight.
No, thank you.
There's obviously other things you could be doing, and we really appreciate your insights. It's invaluable. So thank you again. And there'll be more webinars as we go. Looking to do more first home buyer masterclass as well. Maybe do some webinars with some other professions as well. Maybe solicitor or conveyancer or building and pest inspector. If you think that might be interesting or helpful, reach out and let me know. Hope you have a good rest of your night, and I'll shoot you through the checklist tomorrow, and they'll have our contact details on there if you want to reach out directly.
Amazing. Right. Thank you, everyone. Awesome. And thanks so much, Luke.
No worries. See you guys.
See ya. Bye. Bye.